everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here with our SPY systems. But more recently, we've added our proprietary KISS trend systems, which is exclusive to Breakpoint Trades, gaining a lot of popularity. And anyway, we've been doing this for over 20 years, since 2003, for individual traders and professional institutions. And again, if you're not a subscriber, at the moment you can view our KISS systems. Go to Systems, go to KISS STS Tables, and you'll be brought to a table here. This is the BPT basket. You can see you have various baskets here at the top, and the color here represents systems that have new smart trailing stops that were generated on Friday. For example, the smart trailing stop, we call that STS, smart trailing stop, moved up for UPRO, SSO, SPY, basically S&P 500, Amazon, Google, IWM. And again, the KISS system is a proprietary trend following system that is non-curve fit. It's profitable on almost any instrument. Profit factors anywhere from 2, 3, 4, 5. Again, and that's without changing any parameters. Again, if you haven't become a subscriber, I suggest you do so. Right now, subscribers, a new feature we added on Friday, this star here, this is favorites. So you can set favorites. If you want to Google as a favorite, you can click on that. You can click on any of these for favorites. You have to be a subscriber. The view here, I'm using a non-logged in version. It won't let me select the favorites. But whenever one of your selected favorites gets a new smart trailing stop, the system will automatically send an email to you. So again, that now works for subscribers, and eventually this is going to be password protected even for the general public. So again, if you haven't subscribed to Breakpoint Trades, you should do so. At the very least, you can see here this little pop-up. At least add your email here. Sign up for our free email list. I send out free newsletters and videos, maybe once every week or two. So it's a good area to keep informed about what we're doing, and also see our market analysis and our systems. Okay, so let's go ahead and move back to this weekend newsletter. This is the state of the market technical analysis review of the markets, and it's July 30th, 2023. This is our back-end recording system for our subscribers for our standard web page format newsletters. I'm going to go ahead and click record here to get this started. Again, if you're new here, these videos sometimes could take, especially the weekend newsletters that are very comprehensive, sometimes take 40 to 50 minutes. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone has had a nice weekend so far. It is Sunday afternoon and market futures just opened here. For example, ES futures are up about 6 points. But anyway, I hope you had a nice weekend. This is the weekend newsletter for Sunday, July 30th, 2023. And as you can see via the table of contents at the top here, the newsletter is divided into 7 major sections. First off, we do some opening comments. We look at last week's market performance. Then we move on and we look at the systems. And then I give you another update on the KISS systems. By the way, you can now set up your email favorites for our KISS system tables. So if you haven't done that, I'll show you how to do that. Then I'll go ahead and move on to the general market analysis. We'll do a top-down approach of the major indexes from the monthly, weekly, daily, intraday charts. We're going to then move to indicators and bonds. We're going to review select major sectors. We're going to look at the US dollar. We're going to look at a basket of commodities, precious metals, GDX. And as far as gold and GDX, gold has a potential inverse head and shoulder pattern. It possibly put in a right shoulder, but we need to see the stocks start to outperform, guys. This area needs the stocks to outperform, and at the moment they're not. Okay, and finally, we're going to go over trade ideas, going to discuss recent setups, and also I added a handful of new trade setups to watch. And remember, our trade ideas are generally for swing trades, anywhere from a few days to several weeks. Key events for this week: Chicago PMI, 9:30 a.m. in the morning on Monday. On Tuesday, we have ISM PMI, Global, AMD earnings after hours. Wednesday, we have ADP crude inventories. On Thursday, we have ISM, not initial jobless claims, and of course, Apple reports on Thursday after the close. That's a huge one. And of course, Friday we have the jobs report. Next, item number 2 shows the index sector table, what transpired last week. So you can see it on Friday, the index has bounced back nicely from Thursday's strong sell-off. Mostly Friday was an inside day. And for the week, you could see how the major indexes ended up. The Dow was up 0.7%, the S&P up about 1%, NASDAQ up 2%, Russell 2000 small caps up 1%. Moving on to market sectors, we followed 21 of them here. Again, for the week, most of the sectors were up. A few were down. Real estate, financials just slightly, but banks were up. Transports had a great week. Semiconductors, technology, obviously, home builders. For weakness, we had weakness in biotech, healthcare, drugs, and utilities. Currencies, U.S. dollar up 0.75% for the week, had a really strong rally, but it's run into some resistance supply zone, so we'll see if that marks a little short-term top or not. Moving on to cryptocurrencies, they were down for the week, as you know. And commodities, kind of a mixed bag here. Now the index, the DBC, was up 2%, helped a lot by crude oil, which was up 4.5%. Gasoline up 4.75%, not fun unless you have an electric car. Natural gas down 2.75%. Copper up 2.8%. Kind of a mixed bag in some of these agriculture areas. Wheat was up. Coffee, sugar, corn were down. And precious metals were down for the week. Gold down just a tad, 0.2%. Silver 1.1%. GDX, the miners, the stocks were down about 2.5%. Again, I've been following gold and precious metals for 25 years, and it's always best when the stocks are outperforming, and they are underperforming here short term. So the gold bugs need to see that reversal. And as far as bonds, we had strong rallies last week in the 10 and 30 year. That spooked the market a little bit on Thursday, but then we bounced back on Friday. Next, item number 3 shows the economic news calendar. I already went over all this in the opening comments. You know, the PMI, the non-farm job payroll reports, Apple reports on Thursday, AMD reports on Tuesday, I think. So anyway, let's go ahead and move on. And let's go ahead and talk about Apple first. So here's Apple on the KISS system. So on the KISS system, Apple went long here back in January. So far, it's been able to raise its smart trailing stop, as you can see, 21 times, I think that is, from when I counted. Again, you can check the tables to see exactly. Let's go ahead and do that right now, actually. So Apple, where is it here? So Apple went long. The system went long on January 23rd. It's had 21 smart trailing stops, and the system trade up is up about 39.5%. Okay. So again, we'll see how this fares on Thursday's earnings. It is Thursday after the close. As you know, this is going to be heavily watched. We've already gotten through a lot of the other big cap stocks. Again, plenty of room on the smart trailing stop here. So, we'll see what this does on earnings. Next, let's move back to the admin comments. So, image number 5, this is taken directly from the website. This is the KISS Systems Tables section. Again, you access this area. You already should know where this is, but go to Systems, click on KISS STS Tables, and you're brought to this page. You have the BPT basket, which is what this is on. You have these other various baskets from the S&P 500 stocks, a bunch of ETFs, 100 plus ETFs, all the Dow stocks, and we now have favorites. And you can set your favorites by clicking on the star. And guys, we got the email notification working. So let's take a look at that. So this next image here, item number 6. So if you go to, how do you set, the system's not going to email you automatically. You have to click this checkbox. So go to favorites. So when you go to the KISS systems section, click on the favorites tab on the upper right, and you're going to see a checkbox there that says receive alerts about your favorite instruments. So you got to click that. It's not clicked by default. We need you to opt into it. And then so every day or whatever, whenever there's a new change to one of your selected favorites, Microsoft, for example, if you had that as a favorite, it would have sent you an email on Friday. All right. So that's going to be a very cool feature. So automatically get email alerts to the selected favorites. Again, you have to be a subscriber to Breakpoint Trade. So if you're watching this YouTube video and you're not a subscriber, you can't set these favorites. You have to be a paying subscriber. And let's be honest, you should be. We have great content, systems like this you're not going to find anywhere else. So don't be one of the alligator arms. We're not charging an arm and a leg for websites. So anyway, this is cool. So guys, set up your, go to here and make sure to set up your alerts for your favorites, okay? Next, image number 7. I'm going to discuss an educational topic about the KISS systems. And again, I'm going to be doing an educational video on the KISS systems, and I'm going to link it in the KISS system tables for future reference. But here's a couple things, guys. So here's Meta, and Meta is an idealized example. So Meta, the KISS system, went long originally on November 15th at a price of 117. All right. And since that time, it had 31 smart trailing stops. It rode that whole trend. It made something like 165% on that trade. Maybe it was more. I can't remember exactly. But here's the thing, guys. So there's a couple things. This shows an example where the system didn't hit its smart trailing stop last week, and then of course price went up. You could see the smart trailing stop's 288. So let's take a look at the next image. So image number 8, this shows you where, and this is officially on the website, the smart trailing stop was slightly hit last week at the 292 area. It went 60 cents below it. And then of course price went right back up. I bring this up, guys, because the smart trailing stops here, again, feel free to have a little subjectivity here, where for me personally, whenever the system is coming close to a smart trailing stop, I take a look at my own charts and stockcharts.com or whatever, and I look at it and does it look like a fourth wave pullback? Do I think it's going to, bounce after this pullback? And if I think so, I give it a little more room. 60 cents here on a $300 stock is noise to me. So I might have given it more room, or maybe, another idea, you could use the previous smart trailing stop. You could have used the 283 one and it wouldn't have been hit. Okay. But again, being hit by 60 cents, that could be noise, and you could see price went right up. Again, sometimes the system will hit a stop on a fourth wave pullback, and that's what that pullback was. All right. Now, again, if you don't want to have any subjectivity and you just want to follow the systems exactly, I think you'll be fine doing that too. I'm just saying, don't be afraid to give a little more wiggle room sometimes to these smart trailing stops, especially if the evidence on your charts suggest, okay? All right, just wanted to point that out. Next. Moving back to the general market analysis. So here is the 4 major indexes, the S&P, NASDAQ, IWM, and Dow as the KISS system. So first off, if you look at the upper left, the S&P smart trailing stop raised up slightly, raised up about 9 points. 44.55 to 44.64. And again, guys, like I said, you can have some wiggle room with these smart trailing stops. Like I said, 44.64. Am I worried about if it hits 460, 44.63? No, maybe you round it to 44.60 or whatever. You can see we got the smart trailing stop for the triple Qs raised up nicely up to, let me move this a little bit here, up to 371.40. Again, I would just use 371 personally. IWM moved up slightly as well. And DIA, the Dow, it didn't move up. But notice, and I talked about this late last week, some of these other indicators on here. Really love this moving average ribbon with our BPTMA Deluxe. And again, you can see how wide it was getting away. When these ribbons only get so stretched before you get some reversion to mean action. These numbers here represent the marks. You had a DeMark 13, super wide, moving average ribbon. So again, this may be due for some reversion to mean action. Price is really far away from that smart trailing stop. So, wouldn't be surprised if we had a little pullback in the Dow there. Again, guys, feel free to, these moving average ribbons are a good guide too, like where they're pinching here, were great buy opportunities when they were pinching and price was close to the ATR, stuff like that. Again, the KISS systems have done great on the indexes here, going long back in March for the S&P and triple Qs, and of course later on with IWM and the Dow. Next, chart number 10, here's a yearly chart. So each candlestick represents 1 year of the major indexes and a couple other sectors. So as of July 30th, the Dow is up 7% now for the year. The S&P up 19.3%. The triple Qs up an amazing 44.5%. So huge down year yesterday. It's regained almost all of that now. IWM up 13.4%. The sectors that did the best last year, commodities, are still slightly down. TLT is only up 1.8%. XLE Energy is another one. It's not on here. It's essentially flat for the year. Remember, that was one of the strongest sectors last year. So what was hot last year is not this year, though energy lately is obviously doing well in the short term. Next, chart 11. Here's a monthly view of the indexes. Again, heck of a rally from that October lows of last year. And really not a lot more to say here. Just want to point out maybe some of these upper Bollinger Bands you can see on the NASDAQ 100. It's not very far away. Could be a little target magnet. S&P, you could see where it is up there at 47.43. Next, chart 12. Here's a weekly view of the indexes. Again, we just continue to uptrend. The Dow has been the strongest in the short term. It's still above its upper weekly Bollinger Bands. The S&Ps, it's been riding its 9-week EMA. Again, very strong this year, the market. And of course, Russell rallied nicely off that big coil from the May-April timeframe. It's at the upper portion of the coil. Next, chart 13, here's the Dow. So the Dow, I showed this as a potential inverse hold and shoulder pattern back in early June, and obviously this is playing out so far. We formed a higher low after the first rally from that wedge, that higher low right shoulder. Higher low here was a good place for a stop right at the 50-day moving average. It then rallied and took out the horizontal resistance. That's now big support. Again, short-term support is the 9 EMA here. Again, it got quite overbought last week, short-term. Next, chart 14, here's the S&P 500 charts. We'll move to that. So here's the weekly view of the S&P. Again, heck of a rally from the October lows of last year. And we're now at the upper portion of this channel and this other resistance supply zone. So again, could be an area to stick perhaps. Again, our personal view, if you go and again, you could go listen to our newsletters from before the summer. We said the market was likely to hold up all summer, and which is what it's done. Rallied up nicely. We do think we are looking for a correction sometime this fall, maybe in August, September. We think we're going to pull back at that time. Again, right now we're up at some resistance here. We have a little RSI divergence. Next, Chart 15, here's the weekly KISS system. Now, some of you have asked me to add the weekly KISS systems to the STS tables, and we may do that, but it's not as easy as you think. Those that web page is set up for daily, and we have to do quite a bit of work to convert it. But we may consider adding some weekly KISS systems to the tables. But here's the weekly S&P, and this also has some reversion to mean systems here. Pretty cool. But again, KISS system went long for, it stayed out of the market most of 2022. It took a long there in July, got out in August, and then it went long in actually January. So it did better than the daily. The daily went long in March. This went long in early January, and it's still long. Obviously, smart trailing stops quite a bit wider than the daily. It's 43, 42, 50, 52. The daily's up there, close to 4,500. So, but that's what you'd expect. The weekly is going to give you a lot more wiggle room. Next, chart 16, here's a daily view of the major indexes. This chart got out of order, so I'm just going to go ahead and move on to the next chart. Chart 17, looks like we got a duplicate. We already discussed this. Let's move on. All right, moving down to the daily time frame. Here's the daily view of the S&P. So on Thursday last week, we opened right on this upper channel line, and then we had a big sell-off, as you know, closing right essentially on that 9 EMA, just a few points below it. And then on Friday, we gapped up. We had an inside day. But again, pulling back on that Thursday made sense. You're at the upper portion of the channel. Price was overbought, so made sense. Again, no changes here, but we are up here in nosebleed territory. If you're already not long in your 401k, stuff like that, is this the area to be going fully long? Probably not. You'd want some sort of pullback into one of these support areas, something like that. Okay. Obviously, the market continued to uptrend as long as it holds the 9 EMA here, short term, but it is up in nosebleed territory near some resistance. Next. Chart 19, here's another daily view. This is from last week. Steve was postulating yet another move up, which we got. Now we'll see sometime in August if we get, a pullback within the channel, kind of like we're showing. Wouldn't surprise me. It's definitely overdue. Next. Chart 20, here's another view of the S&P. I'm not going to go over the wave counts specifically. There's a few different wave counts here, but one of them we're looking at is a wave 4 pullback. Like we see here, this would be your more bullish wave 4 pullback, maybe pullback halfway into the channel, and then we get another rally to a new 5th wave high, or you can get an even deeper 4th wave pullback, and then your bigger rally after. Whatever, but either way, we're looking for some sort of pullback in the chart, maybe August, September, and that would also play out with seasonality. Next. Chart 21, here's another chart of the S&P, a real zoomed in view daily. Again, you can see, every time you tag this upper channel line, pull back. Those aren't the places to go long. Those are the places to exit longs or take some head shorts, right? Just like there, we pulled back just a little bit, and from last Thursday. Inside day on Friday. Again, short-term supports the 9 EMA. If that is ever lost on a closing basis, then the next target would be the 20-day moving average. But for now, we continue to hold it. Next, chart 22, here's the KISS trend system for the S&P. Again, it went long back in March. The weekly, remember, went long in January. But anyway, regardless, the daily is nicely profitable here. Current smart trailing stops up there at 44.60. Next, chart 23, here's the 4 time frames. Again, daily, continue to monitor the ATR there. Half day, also monitor the ATR. That pullback on Thursday basically tagged the ATR and held it, as you can see. Same on the 130 minute. We're holding that ATR there too. On the 78 minute, we got an ATR resistance. Next, chart 24, here's a half day chart, just showing the same channel here that I showed on the daily above. And again, no changes. One thing to watch is this RSI trend line. These trend line breaks on RSI work very well. Again, there's some subjectivity, can't say the word, withdrawing trend lines, but whenever you can connect multiple points like this, that's a pretty good trend line. Breaking this could give you an objective little sell signal, and maybe you get a pullback, pretty decent pullback within the channel. Next, Jabber 25. Here's the 60-minute chart. Nice clean chart. These numbers represent symmetry. So these are the pullbacks. So the largest pullback basically since the March lows was this roughly 139 points in early May. That's your largest pullback. You had a 120 point pullback here in late June, and lately these are your pullbacks. You did have a slight break in symmetry here versus this pullback on this channel, so it's possible we could do a little lower high here, and I'll show you that in a minute. Next, Jabber 26. Here's a 30-minute chart. So here's what I mean by it's possible we could put a little lower high. One wave count here. We can count 5 waves up at that 46.07 high. One option would be wave 5 of 3, and then we're having an ABC pullback like this. And then you get that would be a wave 4, then you get another move up in a sort of 5. So that's one option. Again, we'll see how it is. Futures are up tonight, but again, this is still a potential option. Or we just go right to the highs, but this is one thing that we are cognizant of. Next, Jabber 27, here's a 15-minute chart. You can see lately this area has been big support. On Thursday's sell-off, that held the support. Remember, this was previous resistance, support, support. That's why it pays to know where these support and resistance levels are. For now, this pullback here does look corrective, which means eventually another high. Next, Jabber 28, moving on to the triple Qs. Here's a weekly version. Again, we're up near this high of this doji candle. Talked about this last week. An area to monitor, 390.20. Next, Jabber 29, here's the daily view. Again, we continue to hold this 20-day moving average as support lately. So again, guys, a very simple guide that I like to use is whenever you're uptrending strongly, price tends to hold the 9 EMA. Whenever you break the 9 EMA, you almost always test and bounce off the 20-day like you're seeing here. Now, this is important because once we lose this 20-day moving average, what would be the next logical target? 50-day moving average. And again, that might seem oversimplistic, but it actually works very well. I've been following that simple structure for many years. So if that 20 is lost, I'm looking for an immediate dip to that 50-day moving average. You can also watch this trend line under the RSI as a trigger. Next, Jabber 30, here's the KISS trend system for the triple Qs. It went long back in March 13th. A lot of trailing. It's been able to raise its smart trailing stop many times. It jumped way up on Friday from 364 to 371.40 or 371 even if you want to, round it down a little bit to give it some more room. But either way, nicely profitable the KISS system is. Next, Jabber 31, here's the 4 time frames. So on the daily, again, monitor the ATR like on the S&P. The ATR has been lost on the other time frames. Became resistance here on the half day. We did bounce off the support cycles on half day and 130-minute ATR resistance overhead though. Next, Jabber 32, here's a 2-hour review, just monitoring this potential A, B, maybe we get a pullback and a C. Otherwise, you can see a channel here. Next, Jabber 33, here's a 30-minute view. So far, the bounces have been stalling at this supply zone. Next, moving on to the small caps, Jabber 34, IWM. Again, hell of a rally off this demand zone from late last year in October, and of course early this year, all the way up to this upper channel of this coil. Next, Jabber 35, here's a daily view of this coil. Again, guys, if you go and look into our newsletters back in March, April, May, we talked about this lower area being a good area to go long and put a stop right below that lower trend line was a great call. We've made it to the upper trend line. Now, notice the dotted lines here. Perfect symmetry area. So, logical area for the IWM possibly to pull back from. Next, Chapter 36, here's a 60-minute view just showing that resistance here overhead. All right, guys, that does it with the indexes. Now let's look at some of the indicators. So chart 37, here's the VIX. So the VIX, as you know, has been, you know, the traders continue to sell premium. They've done that all year. That is one reason the VIX has continued to decline and the market has went higher. VIX does have this little horizontal support here. It did tag its lower Bollinger Bands on Thursday, bounced off of it for now. Not really seeing anything else. It's trying to base a little bit. Next. Chapter 38, here's another view, this possible wedge pattern we've been watching. Next. Chapter 39, here's the triple Qs with the NASI indicator plotted as a histogram. And to me, this is an interesting chart. So if you look here, last year, the NASI, again, with that negative breath, the NASI stayed negative, and it would go positive for a little bit. And when it fell below its 3 EMA, gave you pretty good sell signals, one right there, one right here. The NASI, as you know, with that negative breath most of this year, stayed below zero until very recently, which is absolutely crazy. But you have a similar situation here. Watch this. If this eventually falls below the 3 EMA, maybe that'll be a good sell signal. Next. Chart 40, here's an interesting chart I haven't shown for a while. This is the NASI summation as a weekly. So back in 2021, what enabled us to get bearish for the market for 2022 was this NASI indicator. It gave a nice sell signal here. They gave it early, but in August, you could see the NASI was declining lower high while the NASDAQ was going up. So it was a good early warning. But quite interesting that this still hasn't crossed back to the upside after all this rally. Just crazy. Next. Chart 41, here's something to be concerned about a little bit in the short term, the NYAD 10-day average versus the S&P. Notice you have a higher high in the S&P. So far, we have a lower high in the NYAD. And again, this is usually a pretty good indicator. Sometimes like back here, you had it in June. And again, it was just a weak pullback. Lasted about a week or so, but it did produce a pullback nonetheless. Even the one back there in April, it did produce a pullback consolidation. So we do have it here, and that's why the market, short term, just be cognizant of that. Next. Chart 42, here's another divergence that's showing up. This is the S&P, higher high versus high yield corporate, lower high. And the market tends to follow high yield corporate. So short term, these are two negatives. Next. Chart 43, here's the NYSI plotted with the 5-3 stochastic on a weekly chart. And this is kind of a systematic chart. You can see the buy and sell signal has been pretty good. Buy signals have been best lately. But here's the thing, we're looking for a sell signal, but one trigger for a sell signal will be a move below the most recent NASI candle. So that's what these dotted lines represents. So the stochastic was overbought way back here weeks ago, but you need a trigger, and we never got a trigger because you need a move below the most recent NASI candle. So if we get a trigger below this, that could be a good objective little sell signal in the short term. Next. Chart 44, moving to some trending systems. So here's the BPSPX. Again, I would generally suggest to stay in with our KISS systems, but this has been pretty good. Whenever this BPSPX, that's the bullish percent S&P, crosses up over the 9 and 20-day moving averages here, gives you nice buy signals. And your sell signals are when it crosses below. Obviously nowhere close yet. But we are losing momentum a little bit. You can see the MACD lines have crossed. So remember, these are never going to get you out at the top or bottom. They're always going to get you after those are put in. Next. Chart 45, here's another simple one, the NYSI with the 9 EMA. Can give you nice little buy and sell signals whenever these cross. All right, moving on to bonds. Chart 46, TLT 20-year bonds down 1.9% for the week. Still holding this big channel, but we'll see if it can hold it or not. If this were to start breaking down, where that would cause the long-term rates to go up, that might spook the market for that seasonality correction in August, September. Next. Chart 47, here's the daily chart. As you know, TLT stalled with a little trend line. downtrend line within the channel. Again, it's still holding the channel for now. Next, Jabber 48, here's the 10-year Treasury yield weekly chart. 10-year up 3.4% for the week. Last time we had a little double top up here. Now we'll see what this does. Again, like I said, if this were to go and break out of here, I think the market would get spooked if rates were to break up through here, but we'll see. Next, Jabber 49, here's the daily. It bounced off the support that we had. Again, we'll see what it does here this week. Next, let's look at some bigger charts. So Jabber 50, here's a linear chart going back to 1974. And, we broke that trend line back in early 2022. We've been stalling. Price stalled right here, which was previous support resistance. But if I'm showing this bigger chart, guys, because if the 10-year eventually breaks this, the next target would be up here, up around this low 5 range, 5.25%. Next, Jabber 51, probably the best way to view this is a logarithmic chart. So here's the logarithmic chart of the same thing. It enabled you to draw this 40-plus year downtrend line connecting the multiple peaks. Again, we broke this 40-year downtrend line back in early 2022. Price has been stalling up around this 4% level for the 10-year. But if it can break this, you can see the next resistance isn't up until this 5.25 range. So we'll keep an eye on that. But obviously, guys, the era of the secular bear market and low interest rates is over. It lasted 40 years. The nice thing is we're able to get a return off our bank accounts and money markets of 5%. Next, Jabber 52, here's the yield curve. Nothing real changed here. As you know, it's been buried seemingly forever. I think all the economists out there suggesting we're not going to have a recession. I still think we're going to have one, but we've never not had a recession when the yield curve has been like this, but we'll see. These are experimental, unprecedented times, quite honestly. All right, let's move and look at some of the market sectors. So here's XLK Technology. Again, just continues to ride its 20-day moving average for now, just like the triple Qs. That's your support. If this is ever lost, remember, then we get a quick dip to the 50-day. Next, Jabber 54, XLC Communication Sector. That contains a lot of those FANG type names, just the epitome of strength here. Here's an upper channel line to watch, or trend line. Next, Jabber 55, utilities have been on fire. We were bullish on utilities back in May and, of course, in June when it had this ascending triangle pattern, and it's been playing out. Again, notice how price just rides that 9 EMA up the whole time since May. That's your current support. Next, Jabber 56, XLF Financials. Again, for now, stalled a little bit at this demand zone up here, or supply zone, I mean. But it also perhaps could be flagging here and eventually break up. But for now, it's stalled there. Still holding the 9 EMA on a closing basis, so strong. Next, Jabber 57, here's the bank sector. A while back we showed this as a coil inverse head and shoulder pattern. It's been playing out. Okay, been riding the 9 EMA. We'll see if we can make it up to the 200-day moving average up into this zone. Next, Jabber 58. So the ways to play that with some of the bank stocks or these ETFs like KBE. You can see that's been playing out nicely. It's above its 200-day moving average. I would suggest probably taking some profits if you haven't done so. Next, Jabber 59, KRE. This is the regional banks. Similar pattern. Again, there's still really not no resistance back here. That's a very thin zone if you look at those price by volume bars. So this could still go up quite a bit higher, but, also not a bad idea to lock in some gains in case it wants to pull back. Next, Jabber 60, XLI Industrials. This has been a powerhouse sector, new all-time highs. You can see the daily just continues to ride its 9 EMA up. We do have some momentum lost on the MACD here, but so far it hasn't, translated yet on a pullback. Next, Jabber 61, XLB Materials. Again, just uptrending strongly. No changes here. Next, Jabber 62, Consumer Staples. We had this as a coil a couple weeks ago, which broke out for a nice trade. Next, Jabber 63 utilities pulling back here off this supply zone. Again, the rally in rates not helping the utilities here short term. You do have some support zone down here at these moving at confluence of moving averages. Next, Jabber 64 XLV Healthcare, another one that busted out of this nice coil. And right now, to me, it looks like it's forming a bull flag. Next, Jabber 65 XLE Energy, again, been one of the weaker sectors this year, but short term it's been strong. Broke its downtrend line, back tested as support, and holding that 9 EMA. Next, Jabber 66 Oil Services, been quite a bit stronger than XLE, as you know, basically up to the highs. Next, Jabber 67 OIH on the weekly. Again, nice rally off this demand zone back in May. It's up in a supply zone here. If it can eventually get through here, I think this could melt up to that 420, 425 area, guys. This is a thin zone. Look at the price by volume. It's almost non-existent. But what I don't think we're going to see is just a straight up move like I'm showing here. What I think we'll see probably is maybe a pullback sometime soon, and then a price goes up and attacks it. Technically, from a technical perspective, that would be the best option. Next, Jabber 68, here's the bullish percent energy index, BPNR. Again, the time to buy the energy stocks, like I said, was back in June there when this was, or May when this was oversold region. It did get up into the overbought region here. Next, Jabber 69, emerging markets. They've been moving higher, as you can see. A little bounced off the 9 EMA last week. Weak dollar will help that. Next, Jabber 70, KWeb, Chinese Internet ETF. Nice move. Look at that volume. Again, if the dollar pulls back more, this is going to help this area. And the final one, Jabber 71, BABA, Chinese Internet. You can see it's got a potential base here. Again, heck of a correction from the 2020 highs. But you can see it's trying to kind of curl up here a little bit. You can see your moving average ribbon's also trying to curl up. Next, moving on to commodities, Jabber 72, DBC. Again, this broke out of this potential wedge about 3 weeks ago. It continues higher. So while commodities have lagged this year, again, they could be one to come back. DBC found support at the 200-week moving average, as I suggested it probably would back in May and June. That was a good area to go long. I do believe commodities are in a bull market here, and that consolidation from the mid-2022 highs was a pullback within the bull market. Next, Jabber 73, here's the daily. Again, just textbook action, broke out of this falling wedge, back tested it as support. It's riding the 9 EMA, and it's trying to flag here. Looks like a bull flag. Look at the volume. Looks good. Next, Jabber 74, crude oil. Also held its 200-week moving average. Nice move here, short term. Next, Jabber 75, here's the daily. Again, as you know, this 200-day moving average was a sticking point even recently, but it's regained it and it looks good now. That was a positive technically. Next, Jabber 76, natural gas. It's forming this long base. The longer it forms a base, the bigger breakout from that base it'll have. Now, some ways to play it would be the ETFs, UNG and BOIL. I hate those ETFs though because they don't move the best, and you get these K1s. Natural gas futures or options would probably be best. Or guys, if you want some stocks, FCG is the ETF. Next, Jabber 77, FCG, that's an ETF that holds a basket of natural gas stocks. So when natural gas eventually breaks out of that base, this could be one to watch or one to own instead of bothering with a bunch of individual names. Jabber 78, DVN, here's another energy stock forming a flag. Okay. Next, Jabber 78, copper, up 2.8% for the week. Let's look at the daily. Jabber 80, here's the daily. Again, rallied off this lower support back in May. Now it's forming a little coil inside this bigger pattern. We'll see if it can break out. Next, Jabber 81, DBA. Slight down for the week, as you can see, but it's had a good rally from that bull flag that I pointed out back in May, June. Next, Jabber 82, DBA on the daily. Again, got a little overbought here short term, some divergence, a little pulling back. Lost that 9 EMA on Friday. It may want to test this 20-day. Next, Jabber 83, Bitcoin. Bitcoin broke that support last week. It looks kind of weak here, guys. You can see broke support. It's been riding below it. This could work lower now. Next, Jabber 84. Now, if Bitcoin does rally or manage to hold on, these are ones I'd be interested in. Mara is probably my favorite. I bought Mara back and talked about this back in May, June when it had that, perfect consolidation base. It was a really nice trade out of that from the 10, 11 area all the way up to almost 20. Again, if Bitcoin sells off though, this will go work lower, but right now you have a 9 and 20 squeeze here. Next, Jabber 35, here's Riot, another one to monitor as well. Again, if the Bitcoin area holds up. Next, Jabber 86, US dollar, weekly up 0.6%. Again, for now, it's bounced off this 200-week moving average. Again, weekly charts, guys, that 200-week moving average is important. You also had a demand zone there. Next, Jabber 87, here's the daily chart. Now, we have rallied up into this potential supply zone. This is potential an area where the dollar could find weakness. Maybe that'll help the precious metals if that occurs. Next, let's move to precious metals. Jabber 88, gold. This shows gold up 1.69%. And anyway, you can see gold here. This pattern, essentially a triple top. But really, there's no real good triple top. There's double tops. I think eventually gold breaks out of this. So again, this gold played out perfectly with seasonality this year. It topped out in early May, as expected, pulled back into July, then it strengthened in July, which is typical seasonality. Next, Jabber 89, gold on the daily. Again, we've been talking about this potential inverse head and shoulder pattern. And the bullish view is we put in a right shoulder last week. Nice rally on Friday. You can see the moving average ribbon pinching. So it does look good here. Next, Jabber 90. My only concern, guys, this chart of gold has the GDX-GLD ratio. I want to see this ratio curl up. Again, I've been doing this for 25 years. This gold does better when the stocks are leading. So we want to see the stocks start leading this week. Otherwise, this could be in jeopardy. Next, Jabber 91. Here's the monthly view of gold. This is the bullish view where we had this essential ABC pullback consolidation that lasted, almost 2 years. And we're up in a wave 5. We had a little wave 2 pullback. And eventually we're going to break to all-time highs in a wave 3 of 5. That's my favorite view. We'll see if it plays out. Next, Jabber 92. Here's gold versus the Japanese yen. Tend to be quite correlated. Short term, the yen's been weaker here, and that is something a little concerned because, again, gold tends to follow it. Next, Jabber 93. Here's the Swiss franc versus gold. Short term here, they're moving pretty much lockstep together. You can see the two are highly correlated. Next, Jabber 94, silver. Again, pulled back last week into the 20-day moving average. That's your support. You essentially had a perfect three-wave ABC pullback into the 200-day moving average in June. Next, Jabber 95, silver. This is the weekly view. Couple items here, guys. Again, the bullish view is an inverse head and shoulder pattern. That's about, 2 years in the making. The bearish view would be a little head and shoulder here. But for that to play out, silver needs to sell off strongly here. Okay. Again, I'm favoring the bullish view, but next, Jabber 96. There's the monthly view. Shows this big pattern here. Steve labels the cup and handle, but really, again, this monthly trend line going back 12 years is what's important. Next, Jabber 97, GDX on the weekly down 2.5%. Still in this big coil pattern. Again, we need to see the stocks start outperforming here. That's my big concern. Next, Jabber 98. Here's the daily. So far, pulled back to this 61.8 fib. For now, holding it. We'll see if it can hold that or not. And of course, the 200-day moving average. Next, Jabber 99. Here's GDX with the GDX GLD ratio. Again, I want to see the ratio start curling up here, guys. If this area is going to go, we need to see that. Finally, Jabber 100. Here's a 2-hour review of GDX. The bullish, you had 5 waves up. Bullish view would be this is an ABC, but again, we needs to get going here. By the way, last week you had a perfect sell signal right here at this wave B high. MACD KISS, stochastic overbought, was a great little area to exit. Take a little short or a hedge against your longs here. Next, Jabber 101. Here's GDXJ. Again, nice pullback here after that trendline break. Next, Jabber 102. Silver stocks, SIL, nice pullback as well. Next, Jabber 103. Here's the bullish percent gold miners index system with the 8-day moving average. This, as you know, this gave a buy signal back here. But notice the BPGDM and the 8-day are right on top of each other. So this is obviously going to either move up and confirm this long again or move down for an exit. All right, guys, finally, let's follow up with trade ideas, final part of the newsletter. So going to go over some recent setups here. So Jabber 104 XP was a coil long idea of ours a couple weeks ago. Obviously gave a great trade. You could be trying to flag here. If you're still long, you could have a stop just below the 9 EMA. Next, Jabber 105 RVLV, another one. Beautiful long from back in early July. It's been stair-stepping up. Just trail the stops up to each successive higher low like I show. Next, Jabber 106 IDXX. Heck of a rally from this trendline break. Still holding the 9 EMA. Again, you can just stay long. Trail your stops slightly below the 9 EMA. You need to be slightly below because if you have it right on the 9 EMA, it's going to get tagged and hit. You want to give it a little extra wiggle room. Next, Jabber 107 VNet. This is one I had on the list. And this is one last week I went long. I got stopped out on this down candle, back to support, and then I went long again. And again, that happens. Sometimes you buy stocks, guys. You can stop out only to buy them right back. I do like the base it's trying to come out of here. Next, Jabber 108 VBTX. It's been on the list. Starting to break out from late last week. Next, Jabber 109 LU, so far given a trade over this resistance area, trend line to the 200-day moving average was your first target area to take some profits. Next, Jabber 110 Diamond Offshore. These energy stocks have done well. This one especially from this coil pattern. It's right at the 20-day moving average now. It's got to hold that. Jabber 111 Rig was another energy play. Really nice move from the coil. It's still holding its 9 EMA here. Next, Jabber 112 9. Here's another energy stock. I'm watching this little wedge into the 20-day. Next, Jabber 113 PRMW was along this wedge. Target was this 200-day moving average, which has been tagged. Next, Jabber 114 Neo. Look at this move out of this flag. Look at these candlesticks. Look at that volume. Wow. Next, Jabber 115 SDIG. So far, it's given a trade out of this flag. Pulling back, it's okay, guys. Can have a stop that makes sense with you. Maybe below the 9 EMA, something like that. Next, Jabber 116 Rivian. Hell of a rally out of this base. I do like Rivian. I do like the truck. I don't own one, but I wouldn't mind owning one. Hold the 9 EMA here still. Next, here's some new setups, guys. So Jabber 117, PSNY, bounced off this demand zone. These are all from volume scans, so they have increasing volume coming into them. Next, Jabber 118, VET. Here's an energy play, coiling. I like coils because they tend to pop. Jabber 119, Kava. Nice coil setting up here. Next, Jabber 120, Data. Coil base pattern, good volume, moving average ribbon. I like this setup. Jabber 21 DOYU, looks like a Chinese play. Low price stock, good volume, resistance 117. Next, Jarbert 122, ICL, little resistance right here at the 200-day moving average. Next, Jarbert 123, BTBT, kind of a wedge type pattern. One to watch here if it can take that out. Next, Jarbert 124, EYPT, flagged off the 20-day moving average. But I am watching this potential follow-through momentum over Friday's highs. Jarbert 125, GRFS, another one that broke out on Friday, but one to watch for momentum follow-through. And the final chart, Jarbert 126, Nikola, one to watch on this light volume pullback, low price stock. All right, guys, that'll do it. Quick check on futures. ES futures are up about 8 points, so everything's looking okay so far. We'll see how things open tomorrow. Enjoy the rest of your Sunday evening. Thanks for all your support. Take care.